Here's some advice from the late Charlie Munger. Go to bed every night a little wiser than when you woke up. On today's podcast, emerging markets portfolio manager Wen Cheong on his passion for learning and how both our team and the tools that we're developing work together to help us be more productive, to compress learning cycles, and to reinvest that extra time into even more curiosity. We end with the corners of the emerging world that have piqued Wen's interest the most: physical AI, low Earth orbit satellites, battery technology in clean rooms, and something refreshingly low-tech: companies winning with customer obsession in markets dominated by incumbents who never had to try. Well, Wen, welcome back to the podcast.
Hey, Rob. Thanks for having me today.
Well, it's lovely seeing you. As listeners may know, Wen's based in Singapore, so we're doing this at odd time zones, at least this one, I think, a little bit more for Wen than for me. But Wen, today I wanted to sort of walk through what investing is like in 2026. Of course, there's so much that's new and exciting. I'm sure we'll talk about AI. But before we look externally, I wonder if we could start inside, how our team works. You work most closely with our emerging markets team. Can you just share what those dynamics look like in terms of making investment decisions and how they've evolved with new technology?
So, let me give you a flavor of the team dynamics. And as a team, we are big believers in, Ray Dalio's concept of believability-weighted decision making. And at the heart of that is, having the humility to say, I don't have the answers all the time. And because of that, I'll need to learn to lean more on my teammates. But in order to do that well, we need to understand each person deeply. I need to understand each person deeply. What are their genius areas? What are their blind spots? And that includes, understanding my own strengths and weaknesses too. So when you know that clearly, you can be more intentional. You tend to lean on people where they are the strongest, and you can be more measured in areas where I may not be as strong. So that has always been our team's culture, and I really enjoy that part of leadership, which is modeled after our firm's culture, and more importantly, under Peter Lambert's leadership. And this involves creating space for my teammates, whom I would call them partners, to spend more time in their areas of strength and to keep developing those strengths further. My story is that investing is difficult. It is very competitive. Lots of smart people out there. But I believe we have a very strong team with Peter, Josh, and Sean, and myself. And I often draw this analogy of us to like being in the special forces. You have very high contributing individuals, each with different strengths and genius areas. And the only way we succeed is by leaning and depending on each other. What makes it very enjoyable is I respect each of them as strong investors in their own right. And what I value is actually the diversity of thought that they bring. And there can be various instances where I don't agree with the investment idea or what they say, but we choose to go ahead with the recommendations as I lean more on that particular partner's input.
Wen, how do you choose to sort of defer? If you have great respect, as you said, for one of your colleagues, and this is a particular knowledge area that you think they're well versed in, how do you balance sort of that deferring to knowledge versus, hey, no, I'm looking at this a little bit differently. I'm going to step in and challenge.
My own personal process is to spend a lot of time voraciously learning about the subject first. I think the first step is to learn a lot about the subject, and then that builds a case, be well prepared for the meeting, and that in itself will build the case to start, a very active and effective debate. But ultimately, if I feel that, for example, Josh or Sean, they have spent a lot more time than me and they are very, very close, I think it's my role to try to find the blind spots through, the initial research that I've done. But at the end of the day, I might well choose to decide to follow their recommendations because for that particular instance, I would trust their research more than mine, given their closeness to the ground. But yeah, it is case dependent at the end of the day.
Can you give us a sense just on the emerging markets team? You mentioned people have different strengths and research. One thing that I noticed about all of you is just the high degree of passion that you have.
Thanks, Rob. And that's a very valid point that you bring up because one common trait across our team is passion. All of us actually started investing at a young age. So most of my partners, they started investing early in their 20s. For myself, I started in my late teens. And to keep growing in industry, you have to have curiosity and real hunger to keep learning. I can speak a little bit more about team dynamics if that will interest you.
Yeah, I'd love to hear about some of the people.
Maybe I'll start with Josh. Now, Josh tends to be a bit more contrarian. And with that, he brings very unique ideas and he pushes us, constantly into areas we may not naturally look at. That being defense, capital cycle, themes, pharma, or other less obvious areas, or even beaten down areas. I think, in my opinion, one of his strengths is just getting out there, meeting people, building relationships, and learning through good conversations. And one thing I noticed about Josh is he is great at relationships because he is a very fun person to be around and have a conversation with. We always have lots of fun chatting together. But through these relationships and conversations that he have outside, he constantly bring back new insights, new ideas to the team. And as I mentioned earlier, Josh is more contrarian. So even from a risk management perspective, he tends to wear a black hat in the team, and he is good at pointing out what could go wrong. And that perspective is very useful, because it keeps me in check. I tend to be a bit more yellow hat on the yellow hat, and that kind of keeps me in check. I can talk a bit about Sean as well. Sean joined last October, and he's a great addition to the team. Sean has this unique ability to quickly join, the dots together and turn information into insight, and that makes him, very strong at idea generation, but also very good at drawing relationships and monitoring what's going on with our existing portfolio companies. And one thing I would like to talk about Sean, he has an incredible memory, almost like a walking encyclopedia. And I often tell him from time to time, hey, do you have an embedded LLM in your brain? Because you ask him something and he goes through his internal database and he comes up with very thoughtful insights. And perhaps maybe because of this, he is an expert, in my opinion, in semiconductors.
Okay.
But he also has a very strong breadth across, all sectors and regions because he reads very, very widely. So I always see him as, wearing the analytical hat, or what I would call the gray hat. He is able to point out and see very clearly the positives and negatives and then provide a recommendation. And as for me, I enjoy making decisions. And, earlier I mentioned I carry more of a yellow hat. I tend to look, for what could go right, where the opportunity is at, and, where is the insight and what the upside can be. So I think as a team, we all balance each other very well.
And that is what stands out to me, is just the balance as you describe the various team members. Going back to the beginning, though, just to wrap up this topic, it's really about the dynamic, right? It's less about each individual. It's how you come together.
Yes, exactly. At the end of all things, I think the most important thing is that it's about the culture. It's about what we care about, being curiosity, openness, and candor. Because, good investing requires the consideration of different perspectives. And as decision makers, we have to see things, through different lenses and genuinely consider, the input of others as well, and remove, ego in the process. And by doing that, hopefully we can make better, more effective decisions. And in that process, also try to reduce some of the blind spots that we might have.
When ChatGPT was released almost 4 years ago now, I guess about 3.5 years ago, and we've seen the technology evolve so rapidly. When we have other guests on the podcast, I think just recently I recorded a conversation with Paul Miraz on the global side, and he's constantly referencing you guys in Singapore as just doing so much to push on how we can incorporate AI into our own process. I'm wondering if you can share in some detail just where you're working on, what's working. Are there categories that of use cases with AI in our investment process that you're really excited about?
Sure, I can. I have tons to speak about that, but I think yes, Maybe you should stop me if I talk too much.
Noted.
But I think but going back to first principles, I think what's really, really important and I'm very proud of is firm culture. Because at Mawer, we do have a culture of constant improvement. And that really, really matters in the age of AI because everything has risk, AI has risk, but we don't want, because of over worry about some of these risks, it leads to completely a stifle of innovation. And I've heard that at many other places. But so I think the goal for us is to be thoughtful, measured, but keep experimenting. And that's what here at Mawer we do best. I think it's very important, and this is my story, to take a step back and think about what we want to achieve with AI.
Mhm.
And after thinking for weeks and looking through my workflow, I came up with two broad categories. The first one, I term it as productivity gains. And the second one, I call it learning compression. So maybe let me just start off with productivity gains. So earlier I mentioned I spent time looking through my own workflow as an investor and then breaking it down into areas where I can create more value versus areas that I create less value. For example, one area that is critical, but probably lower value add from a human perspective is forensic analysis. And the reason is because, it is very important. Forensics analysis protects us on the downside. But by itself, it usually does not create the deepest, insight, long-term alpha for us. But it's very well needed. So what I've found is that with a very well-structured checklist, a well-designed prompt, AI can actually run a very even deeper forensic check across much longer time periods and even more efficiently versus what human input does. And of course, at the end of the day, I'm not saying that we completely take human input as irrelevant, but for humans, we are the second layer of check and review. But AI can do a lot of this heavy lifting, and some of these tools, the forensics tools that we have built, I'm actually quite confident it can identify frauds as well.
Okay, I can see the value of that. I mean, we have that step in our process. It's designed to make us slow down, consider what's in the numbers, just don't fall in love with narrative that we might hear from management, for example. How important is it? And this is a question I often get from clients. Okay, you can maybe have an AI agent do this forensic accounting analysis. But to your point, you want to have the human review to make sure that things weren't missed. How important is it to train the human, though? Meaning, if all you ever knew in your career was to hit a button and run this checklist, are you missing something by not having gone through and sort of learned yourself what, but by actually doing the checklist on your own?
So what I'll say is that AI isn't a replacement for learning. It is a reinforcement for learning. And it's actually learning on steroids. So it doesn't mean that you shortchange the learning process. In fact, it should speed up and you should cram even more learning with a shorter amount of time. Effective learning. That's what I'll call it. And I think that's really, really important. So to your point, I think the basics is still very important. If we were to train new analysts, we shouldn't shortchange it. At times, maybe even do it manually for the sake of learning. But at some point of time, once you have grasp of the basics, I think it's okay to automate, and then you become the higher level checks to do more work, or in the forensics analysis, have questions and then investigate those questions. I think that's where the human layer comes in.
I think that's the key on the productivity side, right? It's less about compiling that the number of days receivable is getting longer. It's more about, oh, the number of days receivable is getting longer. That's strange. Let me go investigate and push on that, because I think this might be a sign of something about the business, something about the character management, whatever. That's something to dig into and really spend your time on that.
Actually, interestingly, the AI tool that I built is able to even explain some of these, whether it's legitimate or it's something fishy going on. It's pretty scary, but very interesting, and it's changing all the time and evolving all the time, getting better all the time. But What I'll say as well is that, I think the most important thing at the end of the day is with building all these AI productivity tools, it's about not just saving time for the sake of saving time.
Yeah.
The real value is actually reinvesting that time into higher value add areas. And what I consider as higher value add areas is places like just reading out of curiosity, just blind learning. Oftentimes when I find I do that, months down, weeks down, or even years down, I join the dots and hey, I create this new insight. So going out, just learning, spending more time on idea generation, that's higher value area, turning over more stones, um, doing more scuttlebutt, meeting people, meeting experts, going for conferences, speaking to other investors, other credible, smart investors, and building those relationships. I think those, in my opinion, I'll count them as high value add, and I would spend more time on that. So, interestingly, when I look at my own calendar this year and I compare it versus last year, what I realize is that my calendar and how I spend time actually looks a lot more different. I attend a lot more conferences, I join a lot more management calls, and every day I'm just aiming to be a learning machine. And Charlie Munger says as well, the aim is to go to bed smarter than you were the previous day.
Oh, I like that. That's really good. Okay, so there's aspects of the process that historically might have taken a lot of time. There wasn't value in the time itself. The value is more in the insights. And so we're really pushing to be more efficient on those. I like your idea of it's not just for time's sake. You got to reinvest it into learning. That's the learning compression part of it. Can I ask about another part of our process that has long been a feature of both how we evaluate businesses, but also how we evaluate price, and that's our Monte Carlo analysis that we embed into our discounted cash flow modeling. Is that still something useful? I mean, which category does that fall into? Is that one that's getting more efficient, or where we're doubling down on?
Fortunately, I haven't been able to fully automate a model and churn out, properly thought of these years. Over time, I think we will get there. But for now, I still spend considerable amount of time thinking out the scenarios. And maybe let me just take a step back to explain the purpose of this Monte Carlo process that we have over here. Really, in short, it is an intellectual exercise in humility. And that's because we live in an uncertain world. And as investors, we can have strong views, but we can never pretend that we know exactly how the future will play out. So the Monte Carlo process actually forces us to build scenarios around an investment case and ask, what are the different ways this thing can go very right or very wrong? And, it's not to create a false sense of precision. It's not about saying this is exactly what the stock is worth, but it's about thinking and mapping out the range of possible outcomes. So maybe some people would call it, the upside downside scenario as well, and the base case. So we ask ourselves similarly, what can happen in a base case, in a bear case, in a bull case, and more importantly, where does the skew lie today? And are we more skewed towards the upside from the current share price or the downside? How does the risk reward look? And that eventually, gets fed also into portfolio sizing. So if the range of outcome is wide, but the upside is very compelling, but downside is manageable, that may actually justify a larger position and vice versa. And maybe I can talk a little bit about an example that we have today that has a very, very wide range of outcomes, and that would be, the AI picks and shovels play, especially with regards to the memory stocks that we see.
Yes.
And I think that's one of the most widely debated topics out there, and especially given historical precedents. But the range of outcomes, in memory can be very wide because, as I mentioned, it used to be a very cyclical industry. And the key assumptions here are things like ASPs, margins, and how long does the cycle last. And in the past, these factors In the future, they may be, but these factors were, the range of outcomes were very, very wide, from substantial profitability and huge losses as well. So, given the environment that we are in today, where supply is actually quite constrained or very constrained, the industry has consolidated, and we have a very, very strong demand environment turbocharged by AI. We have to factor in. Saying is that history always rhymes, and I agree with that. But we also have to factor in the evolution of the industry as well. So this Monte Carlo approach helped us to create that scenario analysis that helps us to see, what happens if, given the current demand and supply dynamics, if it remains for longer. And as you see with all the LTAs signed today, we might, and the very constrained clean room supplies coming in, we might see that cycle dragged out to 28 or past 2028. And that would mean that the bull case, can look very attractive. And then we can also simulate a scenario where the cycle turns earlier. I mean, if you look at all the consensus or estimates out there, I think 2028 is the year that everyone thinks everything would collapse and margin would normalize. So we can also simulate that scenario, and at the end of the day, and create a bear case scenario. But at the end of the day, ask ourselves, does the reward outweigh the risk? And that would fit into how we manage the position or dictate the sizing in the portfolio that we have. I also believe that at the end of the day, this Monte Carlo, a good Monte Carlo process requires a lot of curiosity, openness, and candor. It's like a exercise on character. And we also need people to challenge the assumptions. And I get that all the time when working on these memory names. You need people to ask, what if we are wrong? You need teammates, to look across the company from different lenses and provide input. And then you have to consider and actively consider them. So it's not just a modeling exercise that happens, individually, but it's also very much a team conversation.
Well, and I can see from our earlier discussion just on having the various characters that we have, not just on our emerging markets team, but across the firm who obviously have some interest in this particular topic. But, we're just using this as an example, how that's important. I liked where we wrong, but also where might we be right? Or where might we be underemphasizing what things could happen and having a framework for that. When on the topic of skew, well, maybe this is not on the topic of skew, but I always love asking you, what are some of the big themes that you're following as an investor in emerging markets? I think last time you were on, I asked you something similar. I assume there will be some overlap, meaning we talked a lot about AI last time as well. But as sitting here at the end of June, what are you looking at? Maybe some things that are more obvious, things that are less obvious.
Maybe I'll put a statement up front that, we are first principles investors first. We do not just chase themes for the sake of chasing themes. We have a process of, finding wealth creating companies, good management team, buying in attractive valuations. But at the same time, personally, I like themes because I do like finding, these high quality businesses that are supported by very long-term structural tailwinds. And it allows them to redeploy capital at high rates of returns. I think that's the most important part that I would emphasize. With themes, the profit pools are also expanding, especially in the blue market or blue ocean market where the upside is still hard to size. The opportunity set can be, attractive, and also, the competitive landscape may not be fully formed in that way, and so it can also be a lot less competitive in that regard as well. Fortunately for us, some of these themes that we participate in are already very consolidated with, very high barriers of entry on most occasions. And I think you've rightly pointed out as well that, that we had this conversation a couple months back. I would say nothing really has changed. The themes listed then are still big themes listed today. AI is obviously, the big theme that we have already spent time on. So I think we're spending more time on other areas. But what I would say has changed since then is valuations has run up quite a lot in most cases. But within that whole bucket of AI, you can't paint everything with one brush. Some areas are obviously expensive with a lot priced in. Some areas are still reasonably priced. So obviously, great businesses or stocks can still be poor investments at the wrong price. So we are still doing a lot of work here, continuing to monitor it closely and then make sure our thesis still continues to play out. But within AI, one interesting theme that I have been, or we have been actually spending more time on out of curiosity is physical AI. I think this could one day, not now, but maybe 5-10 years, could be a very important structural theme, and it's very useful to spend some time investigating this theme as well.
Well, just maybe to start, what is physical AI?
Yes. So basically, your humanoids, a lot of automation,
Robotics.
drones. Yes, robotics. Basically, yes, you're right. Mostly used for industrial applications today. Use cases for them now, but who knows what will they be used in? But I think this will be big as well as a lot of reshoring happens in the US, and in order to make the cost structure work, maybe that would force the industry to develop a lot quicker as well. So that's one area of physical AI, and another area that I have interest in is also this low Earth orbit satellites, or LEO in short.
This is because of the SpaceX IPO?
Yeah, but I also think that this connectivity, communications infrastructure, space-based networks will be very important over time, and especially in markets where traditional infrastructure is a lot harder to build. So there are a lot of interest and a lot of capital being deployed to invest in these areas to build their own, national champions, if I would call it that way. So in starting these teams today, we actually identified a couple of interesting ideas that have potentially free options within these physical AI space, LEO segments that are still fairly priced today. But there are interesting opportunities they are looking, and we are constantly on the lookout, finding ideas in these areas as well.
What I'm curious about, Wen, is the situation in the Middle East. I imagine that many companies, geographies are reconsidering energy security. Has that popped up as a theme for you?
Yes. Energy storage, especially for data centers and renewables, have become even more critical in light of whatever you have mentioned for energy security. So I think that is also in part driven, and penetration rate is also driven by the improvements in battery cost, technology, density, and this has created interesting opportunities out there. Obviously, in many areas, they might not be very attractively priced, but there will be spots of opportunity, even large companies, and we do own one of the industry leading China-based battery maker in our portfolio as well.
You mentioned companies reshoring earlier, something that we've heard about for some time, probably the last 5 or 6 years. There was an acceleration in some of that rhetoric probably around a year ago now. Just curious how that's evolved. How far along the path of reshoring or reshaping supply chains are we? I mean, if it's a baseball game, sort of what inning are we in? And we've heard a lot about China plus one as a strategy. How far along are companies in that regard?
So companies are, to your point, are rethinking where they should manufacture, how they diversify supply chains and manage this geopolitical risk. In my opinion, a lot of the thinking was done last year. There were a lot of attractive bills in the US out there to try to bring back manufacturing locally, either through punitive tariffs or, or dangling carrots like tax incentives and stuff like these. Yeah, so it's beyond just moving the production out of China, but many countries are also trying to build more local, resilient supply chains in strategic industries, whether is it in the US or whether is it in Europe. And you can see this in areas like semiconductors, batteries, even data centers, pharmaceuticals and defense, because governments increasingly want these critical capabilities closer to home, or at least within trusted or friendly supply chains, and that in itself creates lots of opportunities across the various parts of the value chain, ranging from logistics, from industrial parks, from ports, and even specialized engineering services. And to give an example, we do own companies like CTP, which is a vertically integrated developer and owner of industrial parks. And this company, Philippine domiciled port terminal company, that operates, they do acquire port concession rights across the world and operate it with world-class standards. So these companies actually benefit from some of these shifts in supply chain, trade flow infrastructure that I've earlier mentioned about. I think I've also mentioned about previously that we also own this company called Actor Group. They have a oligopolistic market position in the clean room engineering consulting space. And this is very interesting because it benefits from the global clean room shortage that we are having now, and the broader build-up of clean room capacity, especially in the US. And for a lot of these manufacturing industries, clean room is like the bread and butter of the capabilities required to manufacture high-end or sensitive stuff.
Yeah, you got to get it right. Beyond these sort of bigger themes that maybe get attention in the news or in papers, curious if there are other themes, that you're kind of looking at that may appear idiosyncratic to a casual viewer, but that might be connected, that might be a little bit more bottom up in nature.
Yes, and I think in my opinion, the key theme of EM and the bread and butter of EM is the theme about and just finding companies that are customer obsessed and having these shared economies of scale principle. Because in emerging markets, many industries have historically been dominated by oligopolistic SOEs or politically connected private enterprises that did not always have to be truly customer obsessed to win, but they can still get away with bad service, and then they also overcharge customers. So the opportunities become very, very interesting when some of these markets open up to competition, and great management with good execution, is able to build a business that operates, more efficiently and focus on the customer and share the cost savings with customer and lower prices. So we like companies in that bucket as well, and they tend to have a few common traits as well. They have managers with integrity. They're also truly obsessed about customers, and as I mentioned earlier, they combine all these with the ability to put profit second, put the customer experience first, make stuff cheaper, more accessible, and the combination of these three traits actually is very powerful, and they tend to become noticeable and a very strong players in the market over time.
Well, and especially as you say, if they're competing against legacy, entrenched, maybe less aligned businesses, I can imagine that those can be pretty strong competitive advantages.
Yes. And to be honest, we do own several portfolio companies in that category, and I'll list some in the finance industry, like Nu Holdings, Bajaj Finance, HDFC Bank. They are all examples of these models that we look at. There are a lot of other ideas that we do have that we are looking at, and hopefully when the time is right, we will own more of these types of companies as well.
When I'm trying to wrap up what we've talked about today, and maybe I'll go backwards this time. So lots of themes out there in the emerging markets world, some that are very exciting, some that are worth watching. But to your point, first principles for us, we're investors. There may be themes out there. We've got to be aware of them. We need to, in some cases, follow them for idea generation. but it's really about the individual businesses. AI is being a bigger and bigger part of what enables us to not only find ideas, but to scale up the learning compression, getting more efficient in the way that we do things. But I think maybe to go back to the start, underpinning that is all the team that we have that can take advantage of this, that knows how to work together, that understands how to challenge each other in a challenging world. Any last comments before we wrap up, Wen?
Yeah, I realize I spent very little time talking about the very interesting tools that we have built, but maybe I'll keep it for the next time. I mean, there are tools like the even the idea generation tool that we have, the knowledge base that it's kind of a couple of us, our pet project. It's my own pet project, but yeah, those are really interesting projects. I am constantly monitoring and updated the latest on the portfolio, and this knowledge base has been a very useful tool to help me continually build my expertise on the companies over time. So
there's just so much to know. And so I'm glad you've got Shan on your team, the walking LLM. And actually, speaking of Shan, I think we're going to have him on when in a little while to dive actually specifically into memory, just given how important that is, both in terms of what's been driving markets as well as some of the positions in our portfolio. So Wen, thank you so much. It sounds like we will have you on again. Appreciate your time.
Thanks. And I would say that you'll be in it for a treat with Shan, talking about memory. So do tune in for that podcast, and take care, everyone.